Good evening and welcome to tonight's webinar, or today's webinar, depending on where you are around the world. We have a bunch of people online tonight, so I'm sure that you're all in various places around the world in various time zones, but you are attending Trend Analysis using Fibonacci's. My name is Brian Kahn. My consulting company is Jupiter Peak Financial. You have my email there, and then you have the Interbank FX education site where I post almost daily a market commentary talking about the macro fundamentals and technicals driving foreign currency price action. There is the website dailyforextradingedge.com. Lots of good analysis there from other contributors as well, so make sure you're taking advantage of it. Before we get started tonight, I just want to make sure that you take advantage of that questions function there. So if you have any questions, please type them in. I'll try and answer them as I move along. So sometimes I will pause and check back here with the moderation panel, if you will, and make sure that I'm able to answer those questions. Before we go further, I'd like to just go ahead and acknowledge our disclaimer here. So I'll just leave this up for a few seconds. And as you're reading this, obviously we know that markets can be quite volatile. There aren't any guarantees. There can be surprises at any time, so trading plans are of the essence. And obviously we are seeing a pickup in volatility, which is great. But if you're trading without discipline and without trading plans, then that volatility may be a hindrance to you when actually it is a very good thing for traders. So just make sure you take heed, and you have links there to read the full risk disclaimer and privacy policy there at the bottom. That being said, obviously tonight is just for education purposes only, so obviously there will be no buy, hold, or sell recommendations. The outline, where we are going this evening, or again, like I said, depending on where you are around the world, could be in the morning, could be in the afternoon. Fundamental analysis, a quick catch-up of what's going on. Technical analysis, obviously tonight we're going to be using Fibonacci retracement, so we're going to be going into a lot of technical analysis, but we'll look at the major trends, support, resistance, and get into live market examples. We'll look at some long-term trends. We'll look at shorter-term ones, because obviously a lot of people out there are that are listening tonight are different types of traders. And then Fibonacci retracements, kind of the meat of tonight's session, how to draw them correctly, and then major levels and what those major levels mean. And then we'll do a little bit of an exercise with your opportunity, and then a quick review. So fundamental analysis, let's go through these slides, this slide, and then I'm going to bounce back and forth, so I'll make sure I pause as I leave these slides and move over into kind of the real-world application where we see the news apply, and then same thing when I do the technical analysis, we'll move into the charts. So I'll make sure that I pause. Is this being recorded? Yes, all of these are being recorded. I will give you the link where there's about 20 of my previous recordings online on the IBFX YouTube channel, the Interbank FX channel on YouTube. So I will provide you with that link. Again, everything has to go through compliance, so as long as I behave myself and don't give out any buy, hold, or sell recommendations, which we've already talked about that there aren't any, and as long as, like I said, I behave myself, then this should be up on that website for you to review within a few days. So fundamental analysis, discussion of current events and what they mean for traders and investors. How do we do that? Well, you can do that right through the Interbank FX website by going to their education and then their tools, and then dropping down into the online tools and into economic calendar. I actually already have it pulled up. So that website, if you aren't aware of it, is forexfactory.com. Other ways to stay involved with what's going on around the world throughout the day, depending on what type of trader you are and when you're focusing on the markets, is CNBC. It's a television station, and there's a global CNBCs for depending on which region of the world you're in. Then you have other websites, Bloomberg TV, Bloomberg.com. You have, obviously, as I mentioned already, your broker, and I'll show you some links there later on in the webcast. And then you have other market sites that you may already be using. So like I said, I'm going to go ahead and switch applications. So this is a good time to start to ask questions when you know that I'm going and switching applications. And we're going to move into the Forex factory calendar. So this gives you a good view of what's going on around the world as far as releases go. The one thing that I will just kind of keep hammering on is, remember, take a lot of this data with a grain of salt, because, and this is why that disclaimer is so important and trading plans are so important and trading with the right size for your account and trade discipline, because at any time, our Federal Reserve here in the United States, the European Central Bank, the Bank of England, over in Asia, those central banks could work alone or in conjunction with each other to do bailouts and austerity measures and quantitative easing, other things going on out there, and those can move currency pairs or any market out there very, very quickly in one direction. It may be good luck for you, it may be bad luck for you, but the point is we don't want to leave things to luck or to chance, so that's why we trade the appropriate size in these markets. It's kind of a strange time to trade when you know that you have the possibility of intervention any time, but that, throwing that aside, it's still a good idea to stay on top of what's going on around the world. You're trading one currency pair versus another. You should be aware of when those currency pairs are having economic releases, because those can affect the movement in them, and you don't want to be caught by surprise. Overall, over the past couple months, just to give you a summary, the economic data in the United States has definitely been taking a turn for the worse. All right, over the past 2 months, the data in the United States has definitely been taking a turn for the worse. We know what's going on over in Europe. We know that there's some, rumblings coming out of China that they're starting to slow down, and we're seeing that in commodities, and I'll show you that in these intermarket relationships in just a moment. But just be aware that my opinion is the equity markets are pretty high, and given how high they are, if economic data continues to show that it's underperforming, there could be a possibility of more downside in the equity markets, which could be higher volatility, which means, for me, volatility to some people means fear or uncertainty, which it certainly does, but to a trader, volatility means also opportunity. The more volatility there is, the more movement there is, the more chance there is for us to look at overbought and oversold situations and build the right trading plans given our fundamental and technical analysis. So you shouldn't be scared by volatility, but you should understand how to trade more volatile markets. But that's always a good thing for the most part, is we like volatility for the most part, because volatility means, like I said, a higher chance of movement, so more opportunity for trading plans to be created. So just keep an eye on this, and that's what I try and provide in my daily commentary, is the macro fundamentals, what's going on. So I try and say, this is what's coming out over the next few days, this is what you should be aware of, and then I'll review as it comes out, and talk about it. So it's a good way to stay on top of it for a few minutes a day. You can go ahead and read the information that I am providing. So that's the economic calendar there. Please stay on top of it. You can link to it right from Interbank FX. Moving back into the slides, technical analysis. What are the traders doing with the fundamental analysis? What are the traders doing with the news coming out of central banks? What are traders doing with the news coming out of the economic calendar? Let's move into the charts, okay? We're going to look at major trends, support, and resistance. We're going to look at live market examples of these intermarket relationships that I mentioned. I don't just trade foreign currencies. I trade stocks and I trade options. So I have the TradeStation platform here pulled up, where TradeStation and Interbank FX are partners, and so you can trade other markets if that interests you by talking to someone at Interbank FX. They can steer you that way. So I have that platform pulled up as well. Just this next slide, and again, before I move to the next slide, these live market examples, I think these live market examples really help to give trading edges and trading plans. Sometimes they may keep you out of the markets, and that's just as good as obviously being in the markets. If you know when to be out of the markets and be more patient, that's great too. So these intermarket relationships, what's going on in certain sectors and things like that, and how that equates to a foreign currency pair, I want to make sure that you guys are aware of that, because some of you out there might be trading equities, might have 401ks and retirement plans, and might have stock options or work for a company and are getting stock in that company, whatever it may be. But many people out there do go ahead and invest in the stock market in some form. So I want to make sure I show you some of those relationships today. We're going to do some long-term analysis, and we'll do some short-term analysis because I know that everyone, out listening tonight, you guys are all in different places and have different time available to trade and trading time frames and time horizons. And then we're going to go into Fibonacci retracements. How do we draw them, and what levels are important? And most importantly, what do these levels mean to a trader, especially a trend trader? These levels can equate to support and resistance. So, and also these levels that you're going to see, not only can they be entries, but they might also be exits too. And the one thing that I want you to keep in mind when you're using Fibonacci retracements is Fibonacci retracements don't necessarily tell us where to get in. They don't tell us where the markets are going. They don't guarantee anything. There's not a holy grail or anything like that. But what they help to tell us is, where are we now versus where were we? And I equate that to, are we now in a place that I feel is a quote-unquote deal, meaning do I feel like this is a fair level to get in using one of my technical tools, the Fibonacci retracement. So that was a lot of slides, so let's start to break down those few slides now as I switch. So again, as I switch here, if you have any questions, please go ahead and pop in with those at any time, and I'll make sure that I pause so that we can slowly go into these charts. So what I'm going to do is I'm going to go ahead and pull up the Interbank FX MetaTrader 4 platform. And I do have some Fibonacci's on here already drawn, but we'll go ahead and take those off and start from scratch. But I'm just pausing here because I want to make sure that you guys catch up with me. All right, let's just review very, very quickly long-term trends out there. And I want to take off this Fibonacci. It was kind of like a reminder, so I want to go ahead and take it off. So anything that you want to take off that you did actually draw, like a trend line or a Fibonacci or anything or any other drawing tool, is I just right-clicked anywhere on the chart, and I'll do it again slowly. So I right-click on the chart, and I drop down, and if I put on like a moving average or something like that that just pops up there that I don't have to draw, that would be an indicator. If I actually drew something, then it's an object. I drew an object. So I want to delete my object. I have one object drawn on this pound US dollar, and I just go ahead and delete it. But what I want you guys to realize, okay, as I put on my crosshairs, I love having my crosshairs up here for my X and Y axis. I move over here. This is as of late. We know over the past few weeks that there's been more volatility, that there's been more movement to the downside in equity markets around the world. The pound, as we see, has traveled down 1.62, 1.61, 1.60, 1.59. So it's lost about 3 or 4 pennies, 300 or 400 pips. That's a pretty significant move down. All right, so that is the pound moving to the downside. The euro, obviously everybody's aware of what's going on over in the euro region. Let's take a look at that over the same time frame. Over the past few weeks, all right, this is a daily chart, so every bar on here is one day. Over the past few weeks, 1.33, 1.32, 1.31, 1.30, 29, 28, 27, 26, and right down here to 2.6. So we know that the euro, with everything going on in that region of the world, even though it's close to the United Kingdom, we know that things are worse in the euro and could continue to get worse. And obviously, compared to the US dollar, it has gone down a lot more than the pound. So that kind of gives you your relationship. Well, which one is stronger between the pound or the euro? Well, the pound only went down a few pips. The euro went down 5 or 6 or 7. Not pips, pennies. 5 or 6 or 7 pennies for the euro. So you would know that the pound is most likely outperforming the euro. So it's kind of your strength and weakness indicator. So the euro has obviously gotten beaten up. Another currency that's gotten beat up, and this is one of the intermarket relationships I want to introduce you guys. Look at this move. This is really, really interesting. Everybody loves gold, right? Gold, 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 gold. Well, the Australian dollar, they are closely tied to gold because that's their major export. They export a lot of gold. And here we have the Australian dollar. Just so you can get an overview of it, what it's done is it has gone from 1.08, almost 1.09, 06, 05, 04, 03, 02, 01, down below parity at 1 even, down to 99 even. So it's lost about 10 pennies, 1,000 pips. Not just that's not in the past few weeks. I'm just looking at that as a pretty big move over the past couple months. Over the past few weeks, though, it has performed very, very poorly as well. 1.04, 1.03, 1.02, 1.01, and then parity, and then underneath parity. Just to show you the TradeStation platform and some equity charts, this is an ETF that represents the materials sector. You can see up here it says materials, and the ticker symbol is for it is XLB. And look at this. This is really interesting. Look at what XLB has done. 37, 36, 35, 34, and really got hammered today. So this is as a result of the worldwide economy slowing down. There's been some rumblings out of China that they don't need as many materials. So if you went and looked at material stocks that make up this index, miners, obviously, that are related maybe to some Australian companies or South American companies where they have miners. If you looked at some of the energy sector and things like that, they're going down. So what's really interesting is this is the first of the year, and we went up, 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 up. And the materials have gotten hammered as of late, and they've retraced, and now they're negative for the year. Most indexes, like the S&P, the broad index, and I can show that to you right here, they're not negative for the year just yet. So let me just make sure that I have the right time frame here for you. Let's look at a daily chart. So you can see the first of the year right here, we started out the year right about here at 1264. We've gone up and we've come down, but we're right at 1324, so we're still up on the year. But the point is certain sectors have gotten hammered a little bit more as of late, and that's where your intermarket relationships come in with the currencies. So you can see, hey, that makes sense that a commodity, like gold, that may not be as needed as much, or a economy that's closely related to mining and things like that, and materials may not be doing as well. So the U.S. dollar and the Australian dollar as of late are pretty flat. Another quote-unquote commodity currency, the United States dollar versus the Canadian dollar, really, really a lackadaisical pair as of late. This is right here. This is January and February and March and April and May, and these purple horizontal lines mark about a 1.5 to 2 penny range. So it was only moving 200 pips up, down, up, down, up, down, up, down. And as of late, oil prices have gone down. The Canadian economy exports a lot of oil, and the United States dollar has climbed 98, 99, 1 even 101, so just above parity. So it's climbed about 3 pennies over the past couple weeks as oil prices have gone down. And I do have oil pulled up in a way here, which is another ETF that somewhat tracks oil prices, is USO. So you have USO prices here going down. So as far as retracements go, if I go back to that XLB chart, you could just see, I'm not going to draw it on here, but you can see from the start of the year right here, we have gone up and we've retraced back down 100% of the up move. So that's what we're trying to see now, and that's what I mean by using Fibonacci's. We just were at 38, now we're down at 34 or under 34. Is it a deal? Meaning, do I see value down here? So that's what I want to use the Fibonacci's to show you guys on foreign currencies, since that's what we're trading. And a really good one to see that on would be the pound right now. So the pound, if I bring on my Fibonacci's, here's a recent move. I'll do the move from the beginning of the year just so you guys can see. Here's the start of the year, and the equity markets went up and the pound went up. And that's kind of been a rough relationship, you guys. When the equity markets go up, usually the United States dollar gets weak. When the equity markets go down, the United States dollar gets stronger. So that's what we're seeing as of late. The equity markets are starting to fall off, and we're starting to see the pound go down. So this would be a long-term trader's chart. Not that a short-term trader can't be aware of it and use it, but this would be a long-term trader. A short-term trader might be only trading for 10 or 15 or 20 pips, and they might only be using 1 day of data at a time and trading intraday, but they still want to know the big picture. So even though I'm an intraday trader, I do put on longer-term trades as well. So the point of this is, here's your Fibonacci. I just measured it from the bottom of the move to the top of the move. So I'm going to go ahead and right-click and go to my objects, and I'm going to delete it one more time so that you guys can see me draw it again. I'm going to go up here to where it says Fibonacci retracement. That's what's great about this is I just hold my cursor over it and a little window appears. So anything that I want to draw, do I want to draw an equidistant channel? Do I want to put text in, whatever it may be? So I go to Fibonacci retracements. I left-click on it. I go down to the start of the move, and every trader will look at it differently. They might use this area. They might use the low. Not going to make much of a difference on a long-term chart like that. I left-click and I drag. I hold my left cursor down and I drag it all the way up to the top here and let go again. So I just measured a move from this point down around 52.97 up to about 63. I just measured almost about 10 pips. And so as it comes back down, as it retraces back down, it's telling me as it came back down here, it retraced 23% of the way. As it came back down here, 38% of the way. So if I measured a 10-pip move, then I would think that halfway back would be 5 pips from the top. So around 63, 57 should be around, halfway back. So 57, 87 is halfway back. So the question for us now as traders is, do we believe that the equity markets, with the relationship that we kind of believe in and that we've seen in the past, if equity markets are oversold and going to start to bounce and go up, does that mean that the pound is oversold and could start to go sideways and up? Now, let's face it, there aren't any guarantees out there. Just because equity markets, if they turn around and went up, that doesn't mean the pound has to turn around and go up, because someone in the UK, the Bank of England, come out and say, we're lowering interest rates. Obviously, that wouldn't be good for the pound if they said we're lowering interest rates, and the United States said we're raising interest rates. So there aren't any guarantees out there, but that's what I want you to be aware of, is these intermarket relationships. Without these intervention surprises, you might be able to key in on them. Let me just see if there's a couple questions coming in there. Is there any way you could show us how to put on the Fibonacci's exactly again? Okay, I'll just do it again. So I'm going to right-click anywhere on the chart, and I'm going to go down to Objects, and I'm going to go to Fibo. I'm going to put a check mark in there, and I'm going to delete it. And again, remember, this will be recorded, so make sure you go and review this. And there are other recordings. I'm going to show you a link. There are other recordings I've done on Fibonacci's as well, so please look for those in my webinar series. Up here to Fibonacci's, I left-click. I need to measure a move. Where did the move begin? I believe, and this is my opinion, I believe the move started here, and I left-click, and I drag up to where I think the move ended. I let go, and those lines are automatically created. So now, like I said, my plan now, you guys might make up a story. I believe that the 38% is going to hold support, because I think that equity markets are oversold. They're going to go up, and if they go up, they should drag the pound with them. All right. I also might see some congestion areas, some old resistance levels here might become new support, and so maybe you put an order in to buy it, contingent upon the stock coming down to this price. You put in a limit order that's not guaranteed to be filled at that limit, depending on the speed of the markets, but you want to be filled down in this area, somewhere down here, around the 38.2 retracement area, around the 59.24 area. Now you have to build a trading plan. Where do you believe it's going to go, and how much do you want to risk for it to get there? Do you believe that the pound is going to go back up to the top? Do you believe the pound is going to rally 20 pips, 30 pips, 40 pips, 50 pips? So based on your analysis and your trading plan, you have to build the risk reward. A lot of people, what they like to do to use Fibonacci's is they use them as support. I believe this Fibonacci is going to hold because of A, B, and C, and reason D, I believe that 38.2 is going to become my new support level. If it breaks support, I get out. And sometimes what people do is they give the pair the benefit of the doubt, and they might use the next Fibonacci level. So they'll go, I don't need to nail it perfectly. I'll get in here at 59.16, and I'll put my stop just below the next Fibonacci level at 58.04. So that's what I mean. This is a long-term trader, who's looking at risking 150 pips or more. So they get in at 59.20 or so. They put their stop below the next Fibonacci level, which is about 130 or 140 pips away. And if they're risking 130 or 140 pips, they're not just trying to make 10 pips or 20 pips or 30 pips. They want this thing to climb back up and make 200 or 300 or 400 pips. So you have to ask yourself, do I believe that the pound is going to go back up 200 or 300 pips? That might be a trading plan for you. Someone short-term, Someone short-term, more of like a swing type trader, might say, I do my analysis. I'm not looking for 200 or 300 pips. I don't want to risk 100 pips. I might risk 40 or 50 pips and put my stop 40 or 50 pips below this, what I think is a support level. And if it bounces off and goes 50 pips, 60 pips, 70 pips, 80 pips, I risk 40 pips to make 80 pips. I'm a hero if that happens. That's my trading plan. I manage it. So just because we were looking at the long term there doesn't mean a shorter term swing or intraday trader couldn't use that, and they might be in this trade right now. They might have got in and their stop might be somewhere down just below kind of where it went today. And obviously if the pound drops further tomorrow, then they may have to get out for a loss, and that's why they have their stops and their trading plans in, because there's no guarantees. So that's just the view of what's going on with the pound as of late. It is cheaper, but the question for you guys is it a deal? Just because it's cheaper doesn't mean it can't continue to get even cheaper than that. So we have to have trading plans to say, why do we think it's a good deal here? Maybe some of you say, I feel more comfortable waiting for the 50% retracement. Maybe it never gets there, and maybe it turns around here and heads up. So what? Your trading plan was to buy it down here. Maybe you saw some support coming in around the 58 level, and you felt that the equity markets had a little bit more to go. You felt that the euro region and things like that, there's a little bit more news to come out of there, and you didn't want to just buy it yet, but you're more interested in getting in at a 50% retracement halfway back. So I'm just checking to make sure that I don't have any questions here rolling in as I'm talking pretty quickly. But you guys can see now, I think you have a much better picture of what's going on with the pound and how it's being traded as of late with what's going on in the news. I do want to just dissect the pound just a little bit more. I'm going to take this Fibonacci off, so I'm going to right-click, go to my objects, go to my Fibo, and I'm going to delete it. Because a couple days ago, and I wrote this on my blog actually, on that market, I call it a blog, it's really a daily market commentary, because a couple days ago, we had the euro region and things like that. The news wasn't so good. I think it was 2 days ago. So today was Wednesday here in the U.S., Thursday in other parts of the world. Here's Tuesday, and here's Monday. So there's still, the equity markets are going down and the euro is going down. I'll show you. Look at the pound on Monday. The pound on Monday went up. Okay, it went up against the U.S. dollar. It went 60.56, 60.76, 60.93, up to 61. It went up about 60 pips. Not a major move to the upside, but a big move to the upside. So that was a few days ago on the 14th of May. If I show you the euro on the 14th of May, okay, what did the euro do on the 14th of May? It went 29.05, 28.75, 28.50, 28.40. The euro went down. So here's a downtrending euro that day because things specific to the euro region. And here's the pound that went up. So a swing trader, all right, a shorter term trader who's just looking intraday at a intraday move, understanding the trend is going down in the pound, understanding the trend is going down in equities, the trend is going down in the euro, but here they understand that and they're focused on today and just today, all right, or put us back into Monday, just Monday, which was the 14th. And you can draw Fibonacci from any beginning of the move to any end of the move. So here's the beginning of an up move, and here's the end of the up move. So what this pair did, and let me see if I can get it down to a 50, so you can see it now on a 15-minute chart. So these are 15-minute bars, and the pound went up, 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 and then slowly it started to retrace 23%, 38%, 50%. So intraday, the pound was 50% cheaper than where it was a few hours before. 1400 GMT time, it was at 61.15. At 1915 GMT time, about 5 hours later, it was at 60.65. It was 45 pips cheaper. So the question is, if the trend is up, and the old adage, the trend is my friend, not the trend overall long term, but the trend of that day, the trend was up, we've started to retrace. Do I want to get back in on the uptrend? And you might look and say, hey, a 50% discount, I think that based on the time of the day, I think that that's, a good place to get back in with the trend, and hopefully it goes up. Remember what time, that's 8 p.m. GMT time. So the United States markets are closed. The European markets are closed, the Asian markets are obviously open, so you're not going to go and say, I need 60 pips or 80 pips or 100 pips out of this if you're a short-term trader, because it's a very slow time to be trading the pound versus the US dollar. So that's another thing. Use the time of the day. Use the charts to be realistic. You can't look for hundreds of pips when it's a very slow time or a slow day for that pair. This pair only moved about 50 or 60 or 70 pips to the upside. It moved 30 or 40 pips down, and if you get 10 or 15 pips one way or the other, you're doing pretty well. You're just using the Fibonacci's to say, hey, it's a trend up. We've started to retrace that trend. Do I think it's a good deal now? So is it a good deal? No guarantees out there. Fibonacci's don't tell me where it's going. They're just telling me how much cheaper it is. So we've drawn a couple Fibonacci's of uptrends, and I'd like to go ahead and draw one of a downtrend for you so that you can see it the other way, because we can do moves both ways. So I'm going to think about a pair that is trending that has had a counter move the other way. So again, if you have any questions, go ahead and chime in. This is a good time as I'm kind of thinking through as far as some pairs to see what we could look at for a downtrend. So we could forecast. Again, I don't like to use Fibonacci's to forecast, so I'm not saying that forecast that, hey, it's going to go to this price, but let's look at this down move over the past couple weeks. Okay, we don't know when the down move is going to end, but let's just pretend that the down move is ending now and the euro is going to start going back up. So I start at the beginning of the move right here. I think this is the beginning of the move, the genesis of the move, if you will, and I draw it down, 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 down to the bottom of the move. That's it. I just drew a Fibonacci measuring a move from 32.70 down to 26.70 roughly, so about 5 pips, 5 pennies, 500 pips. So as the euro starts to retrace up, then I have to ask myself, fundamentally, am I bearish the euro? Technically, what's going on now? Why did it rally? Let's pretend that it started to rally up, 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 and it got back up here to about 29.80 to the 50% level. I have to then decide at that point, because it might happen in one day, it could happen 2 weeks from now, do I believe that the euro is overbought as it retraced up, 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 up to the 50% level, and do I want to use this 50% level as a resistance area and think that it might go back down? Some people like to use moving averages and put that in conjunction with their Fibonacci's. I'm not saying that Fibonacci's are holy grail. I'm not saying that you use them alone. Some people do, and you can, but other people like to get a little bit fancier and use other things. But the point is, your story is, I believe this Fibonacci retracement is either a support level or a retracement level based on a couple other factors fundamentally and technically. That's what you're combining to make a trading story, and you're just using Fibonacci's as one of those tools. If for some reason the euro drops tomorrow and goes down, 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 down more, then I can't use this Fibonacci because it's not measuring the beginning of a move to the end of the move, so I would have to delete it and redraw it from the top here down to wherever we finally did bottom out and start to retrace back up. So I'm not saying we're going to retrace back up anytime soon, but I still want to be aware of it because I might look at that as a good longer-term opportunity to maybe get short the euro at a discounted price. The euro right now down here at 26 or 27, maybe I don't want to get short down there. Maybe my risk reward doesn't tell me to, but once we pop back up 27, 28, 29, maybe I feel that that's a better area to go ahead and get short the euro at 29 even than 26 even or 27 even if I'm looking for a retracement. The retracement's the word. I'm looking for a trend to be retraced so that I can get back on with the trend, but there's nothing stopping from the euro to go 29, 50, 30, 31, 32 and pop back up. That's why I have to have a trading plan. That's why I have stops. That's why I use the charts to tell me, hey, Brian, you're wrong. Get out of the trade. Move on to another one. So that would be kind of keeping an eye on when the euro does, in fact, retrace, where it retraces to, and if we can build a trading plan around that when that does happen. Again, moving, that's kind of a longer term. That was a 4-hour chart. Moving to, I'm going to delete that, and moving to a shorter term chart. It was kind of a choppy day today, so there weren't really super, big trends that retraced and things like that. And that's what volatility is good about, is, retracing. So you can see, obviously, today was not a trending day where we retraced. Yesterday was definitely a trend day that we retraced. So remember, you have to put yourself back in yesterday and kind of pretend that you're there. So I'm going to draw this downtrend. Oops, I'm going to go back up to my Fibonacci's, and I'm going to draw this downtrend. And let's just pretend this was happening yesterday. We were there. We were watching this as it happens. We were a day trader, and we understand that the markets are going down. We understand that, there was some bad news out of Europe and stuff like that. And so we're paying attention to it as it's happening. And we watched the euro drop 28.60, 28.30, 28 even, 27.80, 27.70. So basically this move right here, these are 15-minute bars. This move from here to here is about 100 pips. Then the euro starts to retrace. It only retraced at 23%, and then it dove back down and made a new low. A trend down, that's what you're looking for in a trend down, is a big move down. So you do 3 steps down, 1 step up, 3 steps down, 1 step up, 3 steps down. So yesterday was a true trend day. Down, small retracement, big move down, small retracement, big move down. So any small retracement was the chance to get short the euro yesterday. That's just based on past performance. That worked yesterday. That may not work tomorrow, but we're just reviewing this in hindsight, so that's why this is just for educational purposes and no guarantees of future performance, and no recommendations, obviously. But in a true trend day, you get big moves one direction, small retracements, and then big moves. So if you waited for the 38% retracement or the 50% retracement or the 61.8 retracement, you never got in, but that's your job as a trader to say, hey, this is a different day. There's really bad news fundamentally. I want to fundamentally be short the euro. I just have to decide where. And maybe you decide to be at the 23%. And like I said, you use the next Fibonacci level as your stop. So you got in short at 27.90. You put your stop just above the 38% at 28.06. That's only a 15, 16, 17 pip range for your stop. And if you make 20 or 25 pips, that's it. You risk 15 maybe to make 25. That was your story. You got in short around 27.90. It went a little bit against you, and then it went 27.80, 27.70, 27.65, and there's your 25 pip gain. Okay, so we can constantly update. Maybe that move happened, and you had that trade, and you said, hey, bad news coming out of Europe. You're watching the wires. It's a trend day. I want to get short again, and you can redraw Fibonacci's on every single move. This move is a Fibonacci. So this is a down move from about 27.90 down to 27.50. Not a huge move, 40 pips or so. And then it retraced. It retraced about 20 of those 40 pips. It retraced 50%. And maybe you decided to get short again because you just want to be short the euro that day because that was your trading plan based on the news. So yesterday was a trend day in the euro, and the retracements up were very small as the trend down was the big mover for that day. Today, markets were kind of flip-flopping in the equity markets. Markets flip-flopped as far as the euro and the U.S. dollar. It was directionless today. So today may not have been a good day to use a Fibonacci. You need a trend to use a Fibonacci because a Fibonacci retracement, the keyword retracement, something has been retraced. All right. So let me just move back into, I'll pause a second and check if there's any questions. Let me just move back into the slides. So Fibonacci retracements, how to draw, what levels are important. To answer that question, what levels are important? The 38%, the 50%, and the 62%, those are the most widely used ones, but that doesn't mean you can't use the 23% or 76 or whatever it may be. So the middle three, the 38, the 50, and the 62, those ones are the ones that are most well known as far as being used. But every day is different, and you get to kind of adapt that day and what's going on with your analysis to make that plan and which ones you want to use. Would you also use the Fibonacci's on a short-term scalping trades? Absolutely. So just before I go back in to answer that question, is it a deal? That's what I'm looking for. Is it a deal based on my analysis at that point? So this, by all means, the opportunity that I just showed you in the euro yesterday, that's to me is a scalp. I mean, I don't know if you're scalping 5 pips, 10 pips, 15 pips, or 20 pips, but if we go back to this trade here and you're doing your Fibonacci on this move here, and you're looking for it to stop, retrace at this 23% level, which is a very, very small retracement. Obviously, a 23% retracement is less than a 38, less than a 50, less than a 62. So you're being very aggressive. You're saying, man, this is a really bad day in the euro, and I want to be short the euro at any little retracement that happens. Here's my little retracement, 23%, and I short it, and like I said, you might only be risking 10 or 15 pips to make 15 or 20 pips, and that'd be that move right there. So absolutely, the Fibonacci's can be used for a very long-term trader, an intermediate trader, a swing trader, a scalper, by all means. Personally, I can't get up without even thinking about Fibonacci's. I can't start my day without thinking about them because I think they're a very good tool, not just to get into the markets, but they keep me out of the markets just as much. Today was a much different day, and today was very choppy. Not to say that there's not plenty of opportunity and moves there, but it was just smaller range today, and you had to nail it perfectly. Here, if you're trading the trend and you want to get back on board the trend, you obviously had a better chance of being right if you were going with the right direction of the trend that day. And obviously, that's that old adage, the trend is our friend. We know people can make money fading the markets and things like that and have trading plans. But yesterday, obviously, there was bigger moves to the downside. I'm just basing that on facts. Someone could have made more money going long yesterday in the euro if they were trading larger size, but I'm just saying factually based, the size of the moves to the downside were bigger than the size of the moves. So if you were a scalper yesterday, you were obviously trying to get short, and you may very well have used Fibonacci's to keep you honest as far as what was a good level, to get in. So by all means, definitely they work for short-term intraday traders, absolutely. So going back into these slides, just think about it. Is it a deal? Based on your analysis at that very moment, build your trading plan and say, I believe that it's overbought or oversold based on this, this, or this, and I'm combining maybe some tools such as the Fibonacci retracement to help me with that. Your opportunity, if you're unsure of what markets, because I mentioned equity markets and things like that, and what markets are right for you and what opportunities are available to you, because I help people that do trade foreign currencies not only as intraday traders or swing traders, but I also help them use foreign currencies to protect a equity portfolio, because as I said, there's a relationship. If your equity portfolio is moving down, there could be a good chance, no guarantees, that the US dollar is moving up. Maybe you own a lot of gold, maybe you own a lot of gold companies, maybe you own a lot of oil or oil companies, and you're seeing them go down. Well, is there an opportunity there using the United States Canadian to offset your oil companies, or the Australian US dollar to offset your investment in commodities and things like that in gold? So I help people try and see the well-rounded, the larger picture and the larger situation as far as what's right for them and what opportunities may be available for them across different markets and these intermarket relationships. If you'd like to go through a quick 30-minute Skype call or a phone call, you can set it up with me via email. I talk about you as the individual. I find out what you're trying to do, what your what your account sizes are, what your risk tolerance is, what your time available is, and I create you as the system. And once you know what's realistic for you, I think you have a much better chance for success in the market. So if you want to have an opportunity with me and an unbiased review, no obligation, no fee, just a chance to speak with me for about 30 minutes and let me ask you some questions and print out a nice, concise summary and my opinion of what I think is achievable for you, you can set that up with me via email. To review fundamental events, we talked about what's going on worldwide. News is getting a little bit worse in the economic calendar here in the United States. We know that there's the chance of surprise anywhere around the world from central banks. Technical analysis, we saw that the U.S. dollar for the most part was strengthening as of late against most currencies. And then we talked about intermarket relationships. We talked about the S&P over there in TradeStation. We talked about the materials sector by looking at XLV. And then trends and Fibonacci's. We looked at the big picture of what's going on in the currencies, and then we drew Fibonacci's for bullish trends, bearish trends, long-term snapshots, and short-term snapshots. And again, I keep going back to where are we now compared to where we just were, and do I think it's a good value at this point? I build a trading plan. It's either going to be a winner or a loser. I manage it to the best of my ability. No guarantees. Next webinar in about 2 weeks, I haven't picked a topic yet. That will come out via IBFX. Same thing, fundamental analysis, technical analysis, and then I'll pick the meat or the subject for that specific webinar. Someone earlier had asked if these are recorded. There's about 20 different recordings that I've provided and other analysts have provided. If you go to the YouTube site here and put in Interbank FX videos, my videos are titled Trading in the New Economy. I have about 20 there. There's probably 2 or 3 that do have Fibonacci's on there, so there are other Fibonacci videos on there that I've provided. I do provide commentary almost every day on Daily Forex Trading Edge. I have my own blog, but it's the same information, so you're going to get it at Daily Forex Trading Edge. But if you want to go to my blog for whatever reason, you're welcome to go there. It's the same information. And then I do try and type some intra-market commentary. Today I posted that there was some resistance in the euro-US dollar, and so I do some intraday market commentary as well on the Connect site, that social site, under the title The Locals Take. So you know how to get a hold of me with questions. I look forward to you guys reading my commentary daily and seeing you kind of on that social site, IBFX Connect intraday. If you have any questions, please reach out. Please reach out to Interbank FX if there's something you'd like. I think that you guys get a poll after this. I'd appreciate your feedback and any suggestions, because we want to make sure at IBFX that we're providing education that is helpful to you. So have a great evening. Have a great start to the trading day, depending on where you are, and I'll see you for another webinar in about a few weeks. Thank you very much for your attention and your participation.